Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for September 25th, 2022. Hope you guys and gals are having a great weekend. You know, I'm actually filming this video a little later in the day, which is not typical. I had to do a little bit of traveling today for my family. So I'm here though to film this this week ahead video with you guys and gals. I hope you guys had a great week. I'll tell you what, I had a week. It wasn't a great week, and we're going to talk about all of that and more here in just a few moments. But I want to remind you, for those of you that do not listen to our shows daily, our face shows and our flow show, you may not be aware, but we are actually raising our prices at the end of this month, and we're going to be raising them to $189 at the end of the month. Now, our regular price is $119, but we actually have brought down those prices to $99 a month for you to be able to lock in prices before we raise them for the very first time in like 4 years. So think about this, $99 a month, you're going to be grandfathered in for as long as you stay an active Forex Analytics subscriber. It's a great deal. We are offering it to everybody before we raise our prices for good. Once we raise our prices, they're not coming down. So make sure you take advantage of that. And that's going to be for the remainder of this week as we head into the final quarter of the year. So take advantage of that now. That's all I'm going to say about that. Let's go ahead and start talking about last week. So, you know, as somebody who you know, hosts shows and interviews, and I'm on social media and I'm in different shows throughout the course of the week, you know, a lot of traders don't like to talk about their bad trades, and I do. I talk about the good, the bad, the ugly, and this week was a great example of having a not great week in trading. For me, I started off the week with a great week because I was actually buying yen, and then we had the Bank of Japan intervention. I did really well with the dollar yen dropping towards 140, closed out a lot of profits down there, and you know, about midweek, I was on top of the world, but I ended up giving back all those profits and more based on this dollar move that we saw going into the end of this last week. You know, at the end of the week on Friday, we had this explosive move. You had the sterling that was down literally 400 pips. I mean, 3.5% move in the sterling is unprecedented. But what it did is it actually took the dollar index with it. You saw the euro drop dramatically. We completed an AB equals CD move that we talked about on the week ahead video this last week. Well, we continued further, and actually, you know, I started buying the the euro dollar when we got to the 127% extension, because this was a planned trade that I talked about throughout the course of the week with the Forex Analytics subscribers. I was expecting move down to the 127% extension and then a bounce. And matter of fact, it's not just 127% extension there, but if you actually look on the weekly charts and you go over to the 2016 to 2017 ranges, you can see the 127% extension of this big range also came in at the same spot. So of course, you know, that was a planned trade for me. I planned on buying it down there, looking for a recovery back above 98.50. But because we had such an outsized move in the sterling, it ended up dragging the euro with it and the dollar with it almost across the board. Now, I talk about this because even though it was a planned trade, I ended up taking losses. And you know, when you're in a move that is so big, and the move is so great, and the rest of the market isn't necessarily moving. I mean, look, stocks, you know, you take the S&P, wasn't even down 2%. You'd think that the dollar would let up at some point, but the dollar just kept going. If you look at the Aussie dollar absolutely continued to just get mauled. The Kiwi has just completely got destroyed. The dollar Canadian ripped so hard, and you know, to levels that I wasn't personally expecting. So when you see these types of moves, it's important to always adhere to your stops, and to, especially if you're going to trade counter trend, and make sure that hey, if your stops are there, let yourself get stopped out and move along. You know, I had a situation where I had a great week going into midweek, and then by the end of the week, I gave up all my profits and then some. So that does happen to not only myself, but to other traders as well. And it's important to talk about it because, for those, if you're following other traders that really, they do victory laps when things are going right. And when things are going wrong, you hear just crickets. You're probably following the wrong traders, right? So we all have up and downs, and even me, here we are 25, 26 years later of trading. I still have good days and I still have bad days, and that is expected of being a trader. So just understand that. So now we have to look ahead going into this next week and figure out what the heck we're going to do. This next week, it's still going to be chock full of different events that are happening. If you're on Forex Analytics, you can follow along on your calendar inside Forex Analytics, or just pay attention to what we're saying. And I'm going to actually go through, as I always do on these week ahead videos, I'm going to talk through some live charts because I'd rather us take a look longer term and be able to do a little bit of drawing to see exactly where things may go. So let's start off, and this is going to be a pretty heavy currency centric week ahead video, but I will be talking about gold. I will, because gold did not break back above 1700, which I was looking for. Crude is also breaking down some pretty big levels. And I want to talk about the stock market as well, because the stock market is obviously testing recent lows and 2022 lows. But let's talk about the currency market and talk about the dollar. So I want to stop for just a second and go over to the weekly chart of the dollar index, and notice that we are at the top of this long-term channel. Now, one of the risks that I see with the dollar is that sentiment is extremely bullish. Sentiment, the daily sentiment index actually came in at 97. That's the highest reading I ever remember reading with the DSI over the last 5 or 6 years that I've been following daily sentiment index. It is balmy hot. Now, that doesn't mean, for those of you that don't really follow sentiment, that doesn't mean that the dollar is peaking and it's going to reverse. But what that does mean is that some of the buying pressure might actually ease off as you have that sentiment extreme eases a little bit. So what does that mean? Well, it doesn't mean that the dollar index is bearish. It just means that if you are bullish, you really should start being careful, especially knowing that we are near some very key technical levels. If you look at the dollar as a whole, we are at channel resistance. If you look at the highs from way back here in 2001, okay, to the lows, you can see we're approaching the 88% retracement, which is really the last Fibonacci level that if you're a bear, you want to see that 88% retracement hold. It doesn't mean that the dollar index is going to go down, but what that means is if it does hold there, we might be in a bit of a range for a while, and that's something that we should be paying attention to. Obviously, you can see this is on a weekly chart. Just again, I want to frame reference of the chart that we're looking at. You can see that the RSI, is divergent. So when you have divergent relative strength, that means yes, we are overbought. Yes, relative strength is overbought. Yes, it's pointing higher, but it is lower than previous moves higher that you've seen in the dollar index. You can see the price is higher, but relative strength is not. That means we're going up with less strength. So when we do that, that starts to build a risk around the dollar peaking. Now, has it peaked? No, not yet. But I would say this, looking at the dollar index and going to the daily chart, if we get back below these previous highs, which come in around a 111.80 or so, that would argue that we might be putting a near-term top in. When I say near-term, maybe over a couple of days, maybe over a week or two. And that's something that we should be paying attention to. Obviously, we talked about this the last couple of weeks. The false breakdown below here was going to lead to a move higher, and that we got. And we got in a big way. And that's something that go listen to the last week ahead videos for the last few weeks. We knew that was coming. It came. And it came in a big way, much bigger than I thought, especially over on Thursday and Friday. But regardless, it is here. All right, so there's the dollar index. Let's talk about the euro. So the euro is dropping down to levels we have not seen in a long time. I mean, you're looking at the euro, moving to levels that we haven't seen since, let's go back into the weekly chart, way back into the creation of the euro. back in 2000, in the 90s and in 2000. Remember, the euro actually came into existence right around these levels. So we are testing levels we have not seen since the early days of the euro being created. Now, I have to say that we are at that 127% extension of the 2016, 2017 levels. We have overshot it, but just because we've overshot it doesn't mean that it's not going to hold going into early next week. So it's going to be really interesting to watch where the euro is. I have been reminded that we do have the Italian we have the Italian elections this weekend on Sunday. I don't think they're going to matter so much to what the euro does, but I think it's going to be more of a dollar story. But still, we should know that is happening. And we also have, we have some we have I think the Fed chair, and we have other like the ECB president Lagarde. She's also speaking. We have the Fed chair speaking on Tuesday in Paris. They're going to be discussing a panel with regarding digital currencies. Those types of comments could move the market as well. And I have to imagine that with the dollar strength, it's probably starting to get the attention of not only the FOMC, but also the Treasury as well. Let's continue on into like the sterling. The sterling, we talked about this big channel. Once it broke through that channel, and I've been very hesitant about buying sterling as of late. Rightfully so. Thank goodness I wasn't long, as the Truss's new budget came out, and that's what really took the sterling down on Friday. But notice the extension we're at, a 261% Fibonacci extension of the last major move higher. Does that argue that we should be bottoming here? No, I have Forex analytics members that are like, there's no way I'm touching the sterling on the long side, and I don't disagree. Does that mean that we can get a bounce, or we can't get a bounce? Sure, we could get a bounce, but looking at the sterling right now, you probably want to be selling rallies rather than trying to buy these dips, because we do not know how far these dips are going to go. The last major move higher from the post-COVID lows to those highs back in 2021, that 127% extension comes in around the 106.70 level. So that might be a longer term target for, sterling bears. So I would think that, we are very oversold. We can get a bounce, but maybe you start looking for bounces down at the 106.50 level. The dollar yen. Now let's talk a little bit about it, because the dollar yen, you might be thinking, okay, here we go. We're going to get more intervention up here. I think the dollar yen might be capped around the 145 level, but if we continue to get dollar strength, it's going to feed into the dollar yen. If you look at other yen pairs, and you have to remember the Bank of Japan, Ministry of Finance, they're not just looking at the dollar yen, probably the most important currency pair they are, but take a look at the yen strength against other currencies. Look at the euro yen, look at the sterling yen, look at the Aussie yen, look at the New Zealand yen. Look at the Canadian yen. A lot of that weakness that you're seeing here is not just because you're seeing those other currencies weaken, but also you've got that yen intervention risk behind you. So people do not want to be selling yen necessarily anymore, and definitely not on the crosses. But does that mean that the dollar yen is going to ease up? I don't know. I'd like to see us back below 140 before I start being more confident in the dollar yen actually reversing. And that's not here, and that's not now. I'm going to talk also a little bit about the Australian dollar, because, I have been looking to buy the Aussie dollar recently. I've been in recent days, I've been talking about it. And the reason why, let's go over to the long-term weekly chart. You guys are all very aware of this. We have a complex inverted head and shoulder pattern. When it's complex, that means you have a diagonal neckline. That means you're going to have a diagonal shoulders, right? So you have your right shoulder over here on the left and your left shoulder right over here. The 618 of the major move higher from the post-COVID lockdown lows comes in right around 64.50. You all, if you only listen to these week ahead videos, you've heard me say that number before. I didn't think we'd get down here as quickly as we have, but I think you have to start looking at long-term Aussie dollar reversals around these levels, because as you've probably heard me say this before, this low right here is what I call a generational low. Generational meaning 20 years time. We probably won't see that level again. So when you start seeing dips that get to key Fibonacci levels like the 64.50 level, 64.50, 64 cents, right? That means that we are getting to levels that I'm starting to find as attractive for longer term Aussie reversals, especially if you feel that inflation is going to be a continued issue and maybe commodity currencies might come back into favor in the coming weeks and months ahead. So the Aussie dollar is something that I am starting to look at possible. I'm already long some. And I'm going to start looking at it from a longer term point of view because these are levels that I've been attracted to for quite some time. And most of you already know that. Now, I'm going to turn your attention really quick. One last currency I want to talk about is the US dollar Mexican peso. Why? Because if you want to talk about one currency that hasn't gone anywhere, it's the dollar Mex. And in a risk-off environment, what we should be seeing is we should be seeing the dollar Mexican peso go higher. However, that has not been the case. And we do have Banxico. Their meeting is on, I believe, Thursday morning. Let me just double check that really quick. It is Thursday morning. And, Banxico tend to try to keep the rates in parallel with the Fed. I don't think any expectations have shifted away from that. However, how about post Banxico? If you don't see a more dovish central bank, you might get a situation where the Mexican peso starts to firm up. Now, longer term, most of you that watch me on a daily basis on the Free Face show know that I am looking for a longer term move in the dollar Mex down into the 16, 17 cent range. And could this be the catalyst that drives us lower this week? It's entirely possible. And again, one of those things is you think about trading kind of like a rubber band. You can pull rubber bands only so far before they snap back. Well, when you have the dollar index and pretty much the dollar across the board, that rubber band has been stretched pretty far. So if that rubber band starts to snap back a little bit and we start to see some dollar easing off, one of the currency pairs that could really get hit would be the dollar Mexican peso. So I'm keeping a very close eye on this range. A breakdown of this range should send the dollar Mex to new lows. And that's something that I will be paying very close attention to going into next week. Now, I've said this and I'll say it again, that if you are not aware of our daily shows, make sure you go to them. It's the Free Face show and the Flow show. Those shows are daily and they're free, and they help you prepare for the trading day. Even if you're not in the Forex analytics community. Obviously, we'd love to be in the Forex analytics community because that's where you have like our chat room. You can see our chat room is extremely active. This is Friday of this last week, and you can see there's just a lot of commentary going on throughout the course of the day. You can see that's just in our general chat room, not the other 4 other rooms that we have, whether you're talking about the Flowonomics room or you're talking about the trades room where we actually, everybody, not just us, we all put our trades in and, where we're buying, where we're selling. So if you're not in the community, make sure you get involved in in those free shows. And then also take advantage of the trader funding program. If you want to learn how to be involved in our community and trade our money, take advantage of the trader funding program. I mean, if you have let's say you have $100,000 to trade, instead of putting all that into a trading account and risking losing, 5, 10, 20% of that capital, why don't you take just a portion of that capital, try to take an assessment, just a sliver of that, so you can access our money and keep 75% of the returns and not take any of the risk. So if you want to learn more about the trader funding program, make sure you check that out on our site. And by the way, they happen to be the sponsor of today's show. So let's get back over to the week ahead show. Now, I want to talk to you about just a couple other things as far as gold goes, as far as the stock market goes, and crude oil as well. So gold continues that breakdown. Last week, I thought it might be a false breakdown. We were stalling, but then the dollar took off. Gold came under pressure at the end of the week. I actually bought gold and then I got reversed out of it, but I didn't take advantage of it too aggressively because if you were listening every day, you knew that I was waiting for a move above 1690 and then specifically back above 1700 to get aggressive on the long side. That didn't happen. And so therefore I took a small loss and I moved along. But gold is in breakdown territory. While it's below 1690, while it's below 1700, you got to continue to focus on some downside in gold. And remember that those targets come in around 1604, 1605, or 1600 is probably just the best way to look at it, depending on what feed you're looking at. But right around 1600 is going to be 161% extension of that last leg higher. Okay, that should take us right back down there. If the dollar continues to rally, that would be my next target for gold. Now, take a look at crude oil. People laughed at me when I said, my downside targets in crude are 75. Well, we broke this long-term ascending trend line. It looks like this Gartley pattern will come into play. It should be right around 73 or 74 bucks, 75 bucks. So look for levels around there to really see if we might find some support in the crude oil market. Now, last but not least, let's talk about the S&P. So the S&P, we never got that rally back above, the 618 never pivoted. We talked about us closing below that, and we'd have to get back above that resistance line to turn bullish. That did not happen. But look, we came right down towards 2022 lows. Now, these are yearly lows, and remember, the S&P from the beginning of the year, we're down over 20%. I mean, if you look at, let me just grab the measuring tool really quick. The S&P is down 23% on the year, roughly. Yeah, 22, 23%, depending on, you have to go right to the first. I'm not sure if I was right on the first. I was, but you can see we're down substantially. Now, what's happening next week, aside from all the economic data, which, by the way, let me just name off a few things. We have durable goods orders in the U.S. that's happening, new home sales in the U.S., Richmond Fed manufacturing. We've got, Canadian GDP. We have U.S. final GDP. We have some CPI estimates out of Europe and the Eurozone. We have a lot of Fed governors speaking, as well as the Fed chair speaking as well. We have University of Michigan data at the very end of the week. But what is the most important thing happening next week? Most important thing that we should take into consideration next week, other than all this other economic data. Do you know what that is? What's the end of quarter? It's the end of month, end of quarter. End of quarter. It's going to be interesting to see if we have any, pivotal price action as we go into the end of next week. Maybe some window dressing going on, some position squaring, and, you're going to have portfolios rebalancing. So a lot of really important price actions happening towards the end of this next week. So that's why this, 3650 level that we came really close to testing once again. But also you notice that was a major breakout point from back here post-COVID. And that horizontal support, because it is previous resistance, is right around 3,600. So I would say anywhere between 3,650, because a lot of people are going to automatically get bearish because you break into new lows for the year. But before you get too bearish, note that was a massive breakout point from way back at the in 2000 post-COVID lockdown, reversal levels. After we had that, COVID lockdown, then we confirmed the up move right here at that 3,600 level. It's going to be really important on the way back down. That's why, again, I'll just say it one more time. If we hit new lows for the year, look just slightly below that. You might find some near-term support. Anyway, guys and gals, I want to say thank you so much for spending your time with me. If you like what you heard today, make sure you give us a thumbs up, subscribe to the channel, the Forex Analytics channel down below, so you don't miss any of this exclusive content that we put together for you throughout the weekend. And give us a thumbs up. Tell us how much you like it. Jump in the comments down below if you have anything else that should be on the radar that I may have missed, which I don't catch everything, guaranteed. And let me know how your trading week was. Anyway, my name is Blake Morrow. I want to thank you for spending your time with me. I'll catch you on Monday morning on The Face Show. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.